I'm going to go over the basic introduction to our new standard for Level 1 accounting. This is the last of our accounting standards. Next, we move on to economics. This standard is a 4-credit internal, and the focus is on the financial reports that someone would prepare for a club or a society community organisation. So we're thinking about stuff like the local toy library, or maybe your netball club, or a church group, or something like that. And it goes through, it's a really good introduction to the financial reports. They're basically quite similar to what you would prepare if you were running your own business. So they're a really good practice exercise, and a good chance to kind of get your teeth into what an accountant might actually do. So 4 credits, it's an internal. We will probably be assessing it next term. We'll just see how we go with our hybrid learning. All right, so prepare financial information for a community or organisation's annual general meeting. So financial information. So community organisations, they collect money from fees and fundraising activities. They might make you pay a couple of bucks to use the squash club every time you go in, or it might be that you pay an entry fee to go along to a dancing competition. That may be the club that organises it. Okay, so at the end of each year, they need to make a report, and they have what's called an annual general meeting, which we'll come on to in a minute. But as part of the annual general meeting, the people who put their money into the club and help it work have a right to see how that money is being used and where the money is coming from and going to. And they also make decisions for the club. So they look at, like, hey, maybe we need to up our fees a bit so we've got enough money to cover revinyling the floor of the tap studio, or whatever it is that the group might need money for. Okay, so the information is used to make decisions for a club. So we need to make some reports. The treasurer is the person who's responsible for the club's finances, and that's what we're looking at in this standard. And they have to prepare a written report saying things like, we had this much money in the bank and now we've got that, and we had this really great raffle that made lots of money, or that competition was really expensive and we actually lost quite a lot of money in that. Maybe next time we need to do whatever. So it's giving them some really useful information that as a club they can think about how they're going to use it and what they're going to do to make sure that they've got enough money for the activities that they want to do. So they're going to have a report and some financial statements, and that's what you're going to have to be doing when we get to the assessment for this. Okay. The annual general meeting. Every incorporated society, if it's incorporated and it has society status within New Zealand, there's the expectation that they have annual general meetings, which once a year they have a meeting. They vote on who becomes the chairperson and the treasurer and the secretary, and there might be other roles in there. Might be that if it's a sports club, you've got someone who's responsible for membership, someone who runs the juniors, someone who runs the seniors, someone who manages a competitive team. Those people all might be part of the committee for that particular club. People will vote on how to spend money, manage memberships, and other significant decisions, such as, actually we think we need to buy a new skating rink. I mean, that would be a massive decision for a club to have to make. So that's the kind of thing that will happen in these committees. And often they will elect a committee, so they might have the key people that want to spend time meeting more often and make steps to keep the club running. And then there might be other people who just come along to the club and pay their money and play the sport or do whatever it is that the club is there for. Okay, now we're looking at the reports. So there's a bunch of different reports that you're going to have to make. One is a cash flow statement. We're going to look at those today. The next comes up the trading or activity statement, which shows money made for a specific event. So it might be that your gym club ran a rhythmic gymnastics competition and they charged everyone fees. You would make a report showing how much they collected in fees and how much it cost to run the event to get an overall profit or loss from running that particular competition. And then that information will go into the income statement. So we're looking at all of the money, all of the income that the groups had, so fees, subs, competition entry fees, that kind of thing, profit from raffles, and look at all of the expenses, so maintenance on their assets, costs of coaches or specialists, and big events and that kind of thing. So looking at money coming in, money going out. whether it's making a profit or not, or covering their costs. More importantly, for a club, they're probably not trying to make a profit, they'll be trying to make themselves just financially viable, which means that they can keep going and keep offering whatever it is that that club does. And then the last one is a statement of financial position, which shows the assets, liabilities, and equity of the organisation. More about that later. Okay, so the one that we're looking at today is your cash flow statement. The cash flow shows the actual cash that has come in and out during the year. So if you've got someone who said, yeah, I'll join, and they filled in the forms and never paid the fee, that money that they didn't pay doesn't come on the cash flow statement because it's not actual money that has been received by the club. So the receipts are all of the money coming in, and the payments, all the money going out. And we finish up by looking at the bank balance at the start of the year, plus or minus the cash flow from the year, and then we work out the new bank balance at the end of the year. Now we've got an example here for a Christchurch Car Club. Now if you have a look, one of the important things is that we have all of our little details in the first column and then the total out in the second column. So if you're coming along, you're grabbing it, you want to read real fast, you go, oh wow, we brought in 80,000, we spent 20,800, that's a pretty big gap. So we've ended up with 59,200 in the year. So we've actually got almost 100 grand in the bank. So that would be the key things that people would be looking for, and then they can start their discussion about what they're going to do around fees and what they needed that money for. I hope that makes it clear for you. Thank you.